All right. All-star cast. Steve Forbes, Forbes Media Chairman and CEO. Charles Payne, host of Making Money on Fabulous Fox Business. And Maria Bartiromo, host of Mornings with Maria and Sunday Morning Futures. Maria Bartiromo, thank you. I'm going to go right to you first. All right, your impression. There's two things. There's two stories here. One is what Jay Powell said drove stock prices way up. But the other one's this Lisa Cook subplot. What can you tell us? What was the gossip out there, Maria?
Yeah, and, you know, Lisa Cook was here today, actually. Yesterday she was not, but she did show up today, and there was a lot of conversation about it, Larry, here at Jackson Hole after the Powell speech. Look, I think there are two different stories here, but they're very much connected because Wall Street is viewing the Lisa Cook situation as just more opportunity for President Trump to change the Fed and, in fact, put more doves on the Fed board. And that's basically the thinking. Also the thinking after we heard Powell's speech today and the pretty much suggested confirmation that we are going to get a cut next month, you've got a new thinking on Wall Street that we're going to now enter a period of a string of rate cuts. Because remember, you remove AI, you remove some of the innovation and these, $1 trillion plus market valuations, the economy is showing signs of slowdown, whether it be those recent labor market numbers or the consumer, putting off and businesses putting off some big purchases. So the underlying economy does require and need a cut in rates. Powell is admitting that today, but the market is viewing it as let it rip. Buy stocks because we are entering a new period. You've got a few months before his term is up, and President Trump is now changing the makeup of the Fed. And that's what we're looking at right now in terms of rate cut expectations. And I would also point out that small caps are ripping. You've got the small cap index right now up about 4%. And don't forget, these are those companies that are most affected by a cut in interest rates, Larry.
Yeah, I know you're right. You're right. I think it's a growth signal. Charles, you know this chap, James Fishback?
Yeah.
You do know. I've met him, I guess. So I just want to, I don't know if we can post his tweet or not. He tweeted earlier, I was just escorted out of the Fed's Jackson Hole conference for asking Governor Lisa Cook, a taxpayer-funded public official, about her alleged mortgage fraud. In America, you should never be punished for asking a government official a basic question. And I think the guy was later charged with criminal trespass. So I guess he went up to her, started asking her about the mortgage fraud allegation, and it didn't fare too well with the Federal Reserve security. I don't know. What do you make of this?
I've had him on the show a few times, including once this week. So, yeah, he's a pretty provocative kind of guy, but he has some interesting ideas. And, he's been a staunch Fed critic, without a doubt. So I'm not surprised that this happened with him. So we'll see where that goes. But everyone's asking this question. Hopefully we'll get some answers soon. I think there's a lot of pressure on Lisa Cook. I wouldn't be surprised by early Monday, Tuesday, if she indeed resigned, because that would be the easier path as in making this a real ugly thing.
I want to hear more, but just on that point, the Fed so far officially has said nothing.
Well, one of the speculations was that Powell would somehow mention her today, right? I mean, there were a whole lot of people who wanted Powell to talk about Fed independence today, talk about rate hikes, not rate cuts, and to defend Lisa Cook. That crowd's sorely disappointed, as they have been all year long. And I want to pick up on what Maria said, because everyone's kind of talking about that one line, the shifting balance of risk. I don't think that was the most pivotal part of the speech. This is the most pivotal part in my mind when he talks about longer-term Fed policy. It appears highly likely that if the economy experiences even a mild downturn, our policy rate would be back to ELB, the lower bound, very quickly and for another extended period of time. Before that, he talked about the last time after the GFC, 7 years of Fed accommodation. I think that's what really put a fire on in this market.
So that actually goes to Maria's point, I think.
Exactly.
That we are heading for a major easing cycle. It's not just going to be a quarter point in September.
And the key, even a mild downturn. I mean, just a mild,
just a little teensy-weensy
Just a little teensy-weensy, that's it, yeah.
I know, open the throttles up, Steve Forbes. I didn't hear mention gold or the dollar in any of these musings or commodity indexes. So what do you think about all this?
Well, that would make sense to reference those things, since that gets to the definition of inflation, which is lowering the value of the dollar, which is what's happening in the exchange markets. We see it in gold, see it in commodity prices.
Dollar slipped lower today.
So there's no surprise they ignore what their job is. And in terms of, I think one of the big things Powell said today was reconfirming their false belief in the so-called Phillips curve, the idea that prosperity causes inflation. And he said, given the conditions of the labor market, it's unlikely that wages will match the increase in prices that he thinks is going to come from tariffs. So he's saying the very fact that workers are going to fall behind is a good thing, that it allows the Fed to ease up.
He specifically, I don't mean to interrupt, but on this point, you read this speech, if you can get through it, but he specifically singled out the sluggish jobs and GDP, okay? He didn't talk about inflation. In fact, he doesn't really believe inflation's coming down, and he still believes in here that the tariff problem, the tariff trade problem is going to cause higher inflation. He was focusing only really on the labor market and the slowdown in job creation. Chris Waller on the board called it stall speed. I'm just reinforcing your point. It's one-sided. It's the Phillips curve all over again.
It is, and it's going to do real harm to the economy, because if the dollar continues to weaken, that'll give us monetary inflation. You know, tariffs, even if you say they'll raise prices, there's nothing the Federal Reserve can do about that. That's something out of its control. And they don't distinguish between non-monetary inflation. When you get a war, you get shutdowns like we did with COVID, or a tax increase or regulation or stuff like that. The Fed can't affect that. Yet it's saying, if let's pretend they have a 10% price increase because of tariffs, I'm just being simplistic here, therefore the Fed has to depress the economy because prices are going up. You'd think you'd want to help the economy if there's going to be a hit from regulation or taxes and the like. It's a perverse mentality when you think it through. And that's why, again, I was very discouraged. I think that's why there needs to be a basic overhaul. There was an article today in the Journal about the Fed's going to re-examine its framework. When you read the article, it's like how many angels are dancing on the head of a pin. One says 1 million, one says 100,000. Absolute nonsense.
Maria, out there, what was it? I'm going to call it tariff talk. What was the tariff talk? You know, in Jay Powell's speech, he basically is still worried that tariffs are going to cause higher prices and higher inflation. What did you hear out there about tariffs?
Well, I mean, look, I would say that my perception of his comments is that we were wrong, okay? And the fact that, you know, he's actually saying, well, we're not too worried about, you know, lasting inflation as a result of tariffs, and the fact that he said, you know, it could actually be a temporary blip in terms of the impact. He's in many ways saying we were wrong, and I think it's an important point to take away from those comments, the fact that the Federal Reserve right now is no longer setting the tone for the world. And I want to mention this because I'm about to sit down with the president of the European Central Bank, Christine Lagarde, okay? And the ECB has cut rates 8+ times at this point. And it used to be that the Fed cut rates and then the rest of the world, or the Fed moved on rates, whether it was up or down, and the rest of the world followed. That's no longer the case. The ECB has had its own program, its own movements of cutting rates, and is not following the Fed. So it's really important to recognize what this last several years of Jay Powell and Janet Yellen has done in terms of the credibility of the Federal Reserve and its ability to set policy around the world. They're not. And that's also something that the markets are looking at and saying, you know what, this Fed makeup is about to change with President Trump in charge.
Yes, and not fast enough, if you ask me. Charles, you know, we always talk about Fed independence. There was some of that in his speech, in Jay Powell's speech today. But he should be at least saying to Ms. Cook, whether she's guilty or not, as long as the investigation, this is the Department of Justice investigation, she has to be suspended. And this has happened before with others down, you know, not recently, but years past. People are put on hold, on suspension, while their various issues are investigated either by the Fed or the Justice Department. I think it hurts the Fed and it hurts their independence that they've done nothing. And correct me if I'm wrong, but they've said nothing institutionally.
Well, Schmidt tried to address it today.
Who?
It's Kansas City Fed President Schmidt.
Ah, well, yeah.
It was awful. It was an awful explanation. I interviewed Bill Pulte. He called it bizarre.
What did he say? What?
I don't know. I mean, he's trying to, you know, he tried to circle the wagons as best he could. It was gibberish, I think. Maria.
Maria?
Can I add one point to that?
Yes,
because you know what, Larry, as you know, the independence of the Fed goes both ways, okay? It goes both ways. And, you know, did Jay Powell break and violate the independence himself by basically, as soon as he got into office, talking about climate policies and DEI policies? I mean, first they're saying, oh, no, we have this mandate of inflation and growth, but did they actually break that policy of just focusing on the mandate when they entered into all of those other things like climate policy, the greening of the Fed, as well as those DEI policies, and then further violating that independence by cutting interest rates just a couple of months before an election, and then after an election when Donald Trump won, basically saying, you know, oh no, just kidding, I'm not actually going to continue cutting rates, but now I'm focused on inflation. So when you're talking about independence of the Fed, I think it's important to understand and to point out that it works both ways.
Well, I agree. You listen and pointed out many times. DEI policies at the Fed, climate change policies at the Fed, reputational risk at the Fed, like don't open a bank account for Donald Trump or any of his businesses. All that stems to Jay Powell's management of the institution. I'm just saying to you, Charles, regarding this Lisa Cook controversy, and, you know, this could be a very big problem.
I just don't think they'll let it linger.
I just don't. They've got to do something here, don't they?
I don't think Bill Pulte would have gone out this far on a limb if they weren't very, 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 very sure that something was violated here. And the Fed...
And she should resign.
Right, and the Fed's credibility is already shot. They had a trading scandal under Powell.
Yeah, yes.
You know, then you had the professional mistake with the transitory thing. He thought tariffs were a one-time rate hike, and then 2 weeks later he didn't. I mean, the inconsistencies. If he's talking about his legacy right now, this is another major part of it.
So, Steve Forbes, putting all of this together, like markets are very efficient and smart and so forth. So the markets see that this is going to be a Donald Trump Fed. It's coming, okay? Sooner or later, and the answer is probably sooner. To Charles's point, it's all the center of gravity is completely changing. You've got Steve Myron now, CEA chair under Trump, coming on the board. That'd be 3. They're going to jam it through the Senate in time for the September FOMC meeting. Okay, so that'll be 3. Lisa Cook gets out. Trump's going to make another appointment. That's 4, as Dan Clifton pointed out. And then they're going to start changing the Reserve Bank presidents. That's going to all come, some of whom vote on the FOMC. Now, here's my point. The market went up, I'm going to say 900 points today, okay? It knows everything we're saying, and it likes it. I just have to conclude a 900-point rally says we like the fact that Donald Trump is going to now run the center of gravity of the Federal Reserve. It's not listening to the experts. It's not listening to all these guys talking about Fed independence, woo-hoo-hoo, you know, crocodile tears coming down the cheek. Likes it. And not only that, the market likes one big, beautiful bill and sees a blue-collar factory boom out there. That's why I think Jerry said industrial stocks were going. They've been strong pretty much all year.
Number 1 sector of the year.
There you go. Kudlow, see, I still follow a little bit, Charles. I mean, I do. So I'm just saying the market likes the Trumpian approach. I know the experts don't. Wall Street doesn't necessarily, but investors do. I find that very interesting.
Yeah, but it's very telling, too, that the ECB has cut interest rates. And guess what? The dollar has weakened. They lower rates, their currency got stronger. That tells you something.
So we got to do something. We have to do or say something on the dollar.
One thing. Yeah, the market's like we're finally going to take one weight off our back. But the markets are also telling us don't trash the dollar. And one thing President Trump should make clear, no more talk about weak dollar and trade and that kind of stuff. Great countries have great currencies, not weak currencies.
You know, that was always my rebuttal in the office. That's what I always said, sir. Great countries have great currency. And he likes the fact that the dollar is the world reserve currency, but then sometimes he doesn't mind pinching it a little on the weaker side. I don't know how you sort of get around that logic.
We'll make you head of the Fed.
I don't want to be head of the Fed. I'm going to Maria Bartiromo is going to be head of the Fed. By the way, Christine Lagarde is a very good friend of mine, Maria, and she is a very smart woman. She ran a good IMF, and she's running a great European Central Bank. Last word, Maria. We love your wisdom. Go, give me 20 seconds of Maria stuff. Last word.
Well, I think what you want to look at here is the data going into the next meeting. And that's also a focus here this week in terms of what the next jobs numbers look like, what the next GDP and consumer numbers look like, because that will also be part of the conversation. But I don't think there's any question about a cut in September. And that's what's behind this. I think this has staying power. You strip out the Mag 7 and the AI-related companies, and this market has not been so broad-based. We're seeing a little broadening out today. I think that broadening out is what you're going to look for and what we will see in the coming months.
Charles Payne, give you the last word, too. A friend of mine keeps telling me Dow 50,000. Not me, a friend of mine.
Right.
What does Charles Payne think?
I wouldn't count it out. Ride this wave, and there's something special happening in this country right now, particularly the physical build-out of our nation.
Indeed.
And I think it's going to be reflected in the stock market.
Yeah, one thing Donald Trump wants is factories.
Yes.
And we'll pursue that theme at another time. Gold-backed factories. Anyway, Steve Forbes, thank you very much. Maria Bartiromo, good luck out there. Charles Payne, thank you. And it's been a busy day.